Welcome to the IB Investor channel. Today we're going to have a look at the Swedish listed serial acquirer Indutrade. Indutrade was founded in 1978 in Sweden. The company's original name was Wilhelm Sonesson AB, but later changed into Indutrade in 1989 when it was acquired by Indutrade. It is owner-operated, and the majority shareholder is the Lundberg family through its investment vehicle Lundbergföretagen, a Swedish-listed investment company as well. And they own approximately 26.6% of the capital. Right now, the company has a 69 billion market cap. It offers a 1.4% dividend yield, and for the past 10 years, the stock has returned 22.45% a year. The company's retailer of components, systems, and associated services. The company's products are used in various production processes among major industrial players. Operations are held on a global level through the majority of the subsidiaries, with the largest presence within the European market. An important factor in the business concept is to grow through the acquisition and growth of the companies. The company has more than 200 subsidiaries right now as of Q2 2023, and we can also see that they're operating in 30 countries or more than 30 countries right now. They also have more than 9,100 employees. The management target are as follows over a business cycle. Sales growth of more than 10%, EBITDA growth of more than 14%, and a dividend payout between 30 to 50%. The net debt to equity ratio should never exceed 100%. The return of the share price has been very strong for the past 10 years. And the return has been 574%, as we can see here on the slide. But if we add in and reinvest the dividends back into more shares, that would have added another 102%, providing a total return of 676%. The average annualized return has been 22.45% for the past 10 years, beating the Swedish indices by more than 120% a year, or 12.4 percentage points a year. Now, however, this stock has fallen a little bit this year, and we can see here that it's down almost 10% year to date. Now, this is a business slide, but on the left side, we can see the net sales over time. Sales were a bit stagnant from 2019 to 2020. Presumably because of the COVID situations, probably some factories shut down and so on. But it picked up speed during 2021 and has delivered a fast growth year to date. On the right side, we can see how the sales is divided. The organic sales stood for 7% of the total growth. Acquisitions stood for almost 8%. Meaning that acquisitions do have a major impact still on the growth for this company going forwards. And we also see on the absolute right side here that Indutrade also had major tailwinds in the currency department, providing a 6% additional sales only thanks to the currency situation. And we can see that the sales is roughly 8.1 billion Swedish kroners right now. For this slide, we can see the EBITDA for the company, and it had a solid EBITDA margin and a record high operational cash flow in the quarter, which was up 79%, which is very, very strong. On the left slide here, we can see that the profit development has actually gone up more than the net sales. As you remember on the previous slide, the net sales were a little bit stagnant during certainly 2020, but here we can actually see that the profits are still quite strong and have been developing pretty strong, and we can also see here in 2022 and certainly in 2023 that it has picked up some speed here, which is very good. The margin for the second quarter was 15%, and we can also see that the growth year to date here below was 23%. We won't dwell on this slide for too long, but we can see stable and high order intake and strong sales growth overall. However, we can see a weakening in Finland with 5% negative sales growth and a 2% shy organic sales growth in the UK. I also expect that management isn't too happy about these figures, obviously, but this is also the weak points with a decentralized organization, that each business unit has more local responsibility rather than the top level management telling each business area what to do and how to act. So management here just have to trust the local management here in Finland to make sure that they obviously have all the support that they can get, but in the end it's the local management who are responsible for the sales growth and profit growth in each business area. Indutrade is a serial acquirer, as we call them in Sweden. And so far this year, as of Q2 2023, they have acquired 6 companies with a combined sales of 890 million Swedish kroners. Management has also said that they have several ongoing projects in different phases. And here we can see the slide where we can also see the development and the trend on how many acquisitions they made per year. We can see here that especially during the last financial crisis or the most recent one in 2009, they still had some companies that they acquired, but it was as low as 4 back then, and I would assume that they probably were afraid of their own balance sheets during this period. But then we can also see that it certainly picked up some speed here in 2010 with doubling the amount of acquisitions, and then once again doubling the amount of acquisitions in 2011. And we also see that we have some weakening figures in the acquisitions, where they were most active here as of late into 2021, but we've seen in 2022 that it has decreased a little bit, and we'll see what's going to happen now in 2023. On the top here, we can see that the order intake were actually up 11% for the last or most recent quarter, Q2. We can also see that net sales were up 21% for the most recent quarter. If we go down a little bit to the return on capital employed, it's still at a healthy 22%, which is very good. We can also see that the cash flow situation, or the cash flows from operations, has increased by quite a lot, providing a 79% increase year over year, which is very, very good. This is certainly a situation where you would like to have a lot of cash flows coming in just to be prepared due to the inflation situation. We can also see that the net debt to EBITDA were quite acceptable at 1.9. Obviously, if it's 0, that's probably for the best for the balance sheet, but 1.9 is nothing scary, and I would say that this company probably has the potential to go up to 3.0 without taking on too much risks. But I would say that 1.9 is certainly a good level to be at for this company. Now here we can see the share price at one of my stockbrokers, and as you can see, the development as of late has been pretty crazy. The stock actually went up to 295 at some point here in, I think it was 2021, if I'm not mistaken. But the shares has fallen by more than 30% from that top level down to the current levels. However, for the past 10 years, the stock has provided a 22.45% CAGR, which is very, very strong, especially if you compare it to the 6 RX index, which is the Swedish comparable indices for this type of stock. And for the long run, I mean, if you're beating the index by 100%, or in this case, 12 percentage point each year, I mean, that's going to be a massive difference, as you can see. So the yellow line is one of the indices that we're comparing it with, and it's just a massive difference over time. So this stock has been a really good performer. I also included a dividend slide here for the dividend guys, and as we can see here, the company has delivered a strong dividend growth history from 2014. I have some statistics here going all the way up to the most recent quarter. And the development has been strong, as you can see. The only exception would be 2019, where the payout is happening in 2020, where the board probably took the safer road here due to the COVID-19 situation, where there were a lot of fears what was going on in the world. And speaking of experience, I mean, we didn't know if companies were going to shut down completely or not. And imagine if you need to shut down the company, then you can't pay out dividends because you need to protect the balance sheet during a period such as that. But other than that, they raised the dividend as of late here by 13%, and as you can see, that it's been a pretty strong track record of increasing the dividend here. As with any company such as this that deals with a lot of acquisitions, there are some risks. And I think the best example here that we have, at least for the most recent quarter in Q3, is Volvo, where they advised that for the remainder of the year, they expected the sales and profit to be pretty good, but where the sales order intake had been reduced by double digits. So I would expect that Indutrade's companies would have a similar situation here, probably for the next year, where they see that their customers are more sensitive to the market environment as inflation will bite into the real world numbers, so to speak. They also have acquired a lot of companies. They have more than 200 companies right now, and I think the question that many investors ask themselves, including myself, is how far can this grow, or how far can this go, as they work with a decentralized organization, and that means that obviously a lot of local responsibilities put down to the different business areas, but I'm not sure how far this can grow before it becomes just a mess. But it's been very successful so far, and we'll just see what's going to happen. But that is obviously a risk. It's always a risk when you acquire companies. Everything can look really good on a pro forma sheet that the companies deliver, but to actually get the numbers out of them year after year, that's a total different story. But I think they have a pretty good track record, and they've done very well for themselves up until now. So we'll see what will happen. And also we have the debt situation where it's 1.9 times net debt to EBITDA. And that is obviously a risk because that's money that they owe to somebody else. So in this market environment, I mean, obviously it would be better to have that number to be zero. But if you want to drive returns, especially for this company, as they are acquiring other companies, they need some sort of leverage in order to manage that, because the cash flows won't be enough in the short term. Looking at the upside of the stock, the share price has actually dropped approximately 36% from its all-time high. So it's definitely cheaper now compared to what it has been. And right now we're looking at a P/E ratio 24 for the most recent quarter, or trailing 12 months. And as we can see here in the slide as well on the left side, they have a very strong track record of growing the EPS. So it's gone from 2 Swedish kroners per share to 7.4 kroners a share in 2022, and that equals to a CAGR of almost 18% for these 8 years. And then I'm not including the most recent year, 2023, as we've only had 2 quarters so far. So yeah. All right, this was everything for this presentation. If you liked the video, please hit the like button below. And if you wish to see more videos in the future, please hit the subscribe button below. Thank you very much. Bye-bye.